Based on the historical data and forecast, Bitcoin has been exhibiting volatility, with periods of both upward and downward trends. The RSI consistently fluctuates between 32 and 47, indicating neither strong overbought nor oversold conditions for most of the period. The Bollinger Bands show that the price has been bouncing between the upper and lower bands, suggesting a sideways trend with potential for short-term breakouts. Considering the recent decline and the forecast predicting a further dip towards $98,800, I propose a contrarian strategy focused on short-term gains. My recommended strategy is to initiate a long position when the price touches the lower Bollinger Band, specifically at $98,300. The stop loss should be placed slightly below the lower band at $97,800 to account for potential volatility. The target price will be set at the center of the Bollinger Bands, which is $101,400. This strategy combines the RSI's indication of potential oversold conditions with the Bollinger Band's prediction of a bounce. This portfolio should yield a high return within a short period. Based on the historical data and forecast, Ethereum exhibits a downtrend. The price has been fluctuating around the 3,400 support level, with recent resistance at 3,790. The RSI consistently hovers below 50, indicating weakening momentum. The Bollinger Bands show a narrowing range, suggesting potential volatility. Given the forecast for November 13 to 19, 2025, which includes periods below 3,300, a short position appears prudent. I recommend entering a short position at $3,330, with a stop loss placed at $3,420 to limit potential losses if the price unexpectedly rises. The initial target price should be $3,250, aiming to capture a significant portion of the predicted decline. To refine the strategy, I suggest incorporating the RSI and Bollinger Bands. When the RSI dips below 30, indicating oversold conditions, consider a partial covering of the short position. The center of the Bollinger Bands has been trending downwards, so if the price touches the upper band, it could signal a potential reversal. I recommend adjusting the target price to $3,250 if the price reaches the lower Bollinger Band. This layered approach allows for both capitalizing on the downtrend and mitigating risks through strategic adjustments based on technical indicators. Based on the historical data and forecast, XRP has been trading within a defined range between $2.29 and $2.53. The RSI fluctuates around 40, occasionally dipping below 30 and rising above 50, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been near the lower band recently, suggesting a potential bounce. Considering these factors, I recommend a long position strategy with an entry price of $2.3. Set a stop loss at $2.26 to protect against a further decline, and target a price of $2.46, aligning with the center of the Bollinger Bands and a reasonable profit margin. To refine this strategy, we'll incorporate an RSI-based approach. If the RSI drops below 30, indicating an oversold condition, enter a long position at $2.21. Place a stop loss at $2.17 and aim for a target price of $2.38. Conversely, if the RSI exceeds 80, indicating an overbought condition, consider a short position. However, with the current upward trend and forecast, a long position appears more favorable. Combining these elements, the most efficient portfolio would be a long position with an entry price of $2.3, a stop loss of $2.26, and a target price of $2.46, adjusted based on RSI signals for enhanced risk management. Based on the historical data and forecast, BNB shows a downtrend. The price has been fluctuating within a range between $919 and $996, with the recent price action indicating a bearish momentum. The RSI consistently below 50, with dips into the oversold territory, below 37.0, suggests potential for a short-term bounce but doesn't negate the overall downtrend. The Bollinger Bands are narrowing, which could signal increased volatility. Given the forecast for the next week, with prices predicted to decline to $908, a short position is warranted. Therefore, I recommend a short strategy with an entry price of $954. The stop loss should be set just above the recent resistance at $959, to avoid being trapped in a potential short-term rally, making it $959. The target price should be aligned with the forecast low of $908, offering a significant return. To refine this strategy, we can use the RSI as a secondary signal. If the RSI rises above 50 during the trade, it's a sign of weakening downtrend, and we should consider exiting the position earlier. This portfolio combines the trend analysis, RSI, and Bollinger Bands to maximize efficiency and minimize risk. Based on the historical data and forecast, Solana has shown significant volatility with a clear downtrend in the recent past. The RSI consistently dips below 37, indicating oversold conditions, while the price struggles near the support level of $147. The forecast for the next week predicts a continuation of this downward trend, with prices hovering around $143 to $151. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will enter a long position at $151, anticipating a bounce from the support level. To manage risk, we will set a stop loss at $143, just below the forecast low. Our target price will be $161, aligning with the recent resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the oversold signal. If the price touches the lower band of $141, it further confirms our entry point at $151. The strategy will be adjusted to include a second target price of $175, coinciding with the center of the Bollinger Bands. This multi-layered approach aims to capitalize on short-term rebounds while safeguarding against further downside risk. This balanced approach, combining RSI, Bollinger Bands, and support/resistance levels, offers a robust strategy for maximizing returns in this volatile market. Based on the historical data and forecast, TRON shows a slight upward trend, although it has been oscillating within a range. The RSI consistently remains below 50, indicating that the asset is generally oversold. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering the support price of $0.291 and the resistance price of $0.342, a conservative strategy would be to look for opportunities to buy near the support level. The forecast data for the next week shows a price hovering around $0.291 to $0.292, reinforcing the idea of a potential bounce from the support. Therefore, I recommend a long position entry at $0.292. Given the recent oversold conditions and the proximity to the support level, a tight stop loss should be placed just below the support at $0.288. For the target price, I would aim for the middle of the Bollinger Bands, which is around $0.295, offering a modest but reasonable profit. If the price breaks above the resistance of $0.342, consider increasing the target price to $0.342. This strategy combines RSI oversold signals with Bollinger Band support and resistance levels for a balanced approach. Based on the historical data and forecast, Dogecoin shows a downtrend. The RSI consistently hovers below 50, indicating a bearish sentiment, with several days falling into oversold territory below 30. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week projects further decline. Combining these factors, a short selling strategy is recommended. We will enter a short position at $0.163. Given the support price of $0.158, we will set a stop loss at $0.167 to limit potential losses if the price unexpectedly reverses. Our target price will be $0.154, reflecting the lower bound of the forecast and the potential for further downside. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, it signals an oversold condition, providing an entry point. If the price touches the lower Bollinger Band, it further confirms the potential for a short position. Conversely, if the RSI rises above 80, it indicates an overbought condition, suggesting a potential long position. Considering the current bearish trend and the forecast, we will prioritize the short selling strategy. The portfolio will be 80% short Dogecoin and 20% in cash to manage risk. This approach aims to capitalize on the predicted downtrend while mitigating potential losses through careful risk management. Based on the historical data and forecast, Cardano has shown volatility with a recent downward trend. The RSI consistently dipped below 30 during the period, indicating oversold conditions. The forecast for the next week suggests continued downward pressure, with prices hovering around $0.52. Given this, I propose a contrarian strategy focusing on potential rebounds from the support level. We will initiate a long position at $0.528, placing a stop-loss order at $0.508 to limit potential losses if the downward trend persists. The target price will be set at $0.547, aiming to capture a moderate upward correction. This strategy leverages the oversold RSI and anticipates a bounce from the support price of $0.357, while the Bollinger Band's bottom suggests a potential floor around $0.506. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the bottom band of $0.506, it strengthens our conviction in the oversold condition and justifies holding the position with a tighter stop-loss. Conversely, if the price breaks above the upper band of $0.694, it signals a trend reversal, and we will consider exiting the position or adjusting the target price. The RSI, hovering around 38.1, suggests that the asset is not yet strongly oversold, so a smaller position size is recommended to mitigate risk. This combined approach of RSI and Bollinger Bands aims to maximize potential returns while effectively managing risk, targeting a profit of $0.547 with a stop-loss at $0.508. Based on the historical data and forecast, Wrapped Beacon ETH has shown considerable volatility, with a recent downtrend followed by a slight recovery. The support price consistently holding at $36.70 and resistance at $4,100 suggests a trading range. Considering the RSI values, the asset has frequently entered oversold territory, particularly between November 6 and November 12, indicating potential buying opportunities. The Bollinger Bands show that the price has recently touched the lower band, further supporting a potential bounce. Therefore, my strategy will be a contrarian approach, capitalizing on the oversold conditions and potential rebound. My recommended strategy is to initiate a long position at $3,540, coinciding with the forecast price on November 16 and the recent touch of the lower Bollinger Band. To manage risk, set a stop-loss order at $3,390, just below the recent low and the bottom Bollinger Band. The target price will be $3,710, aligning with the forecast price on November 18 and a conservative profit target within the established trading range. This strategy combines RSI oversold signals, Bollinger Band confirmation, and forecast price levels for a high-probability trade. The potential reward-to-risk ratio is favorable, offering a reasonable profit potential while limiting downside exposure. Based on the historical data and forecast, Chainlink shows a downtrend, supported by the consistently lower forecast prices of $14.6 to $14.2 over the next week. The RSI values fluctuate between 32.8 and 45.4, indicating periods of both oversold and overbought conditions. However, the recent trend suggests a bearish momentum. Considering the support price of $13.2 and the Bollinger Bands, I recommend a short position strategy. We will enter a short position at $15.2. The stop-loss will be set at $16.6, just above the upper Bollinger Band to account for potential short-term price fluctuations. The target price will be $14.1, aligning with the forecast price and the support level. To optimize returns, I suggest a layered approach. Initially, take 30% of the position to $14.1. If the price continues to fall, add another 40% of the position to $13.7. Finally, if the price continues to fall, add the remaining 30% of the position to $13.2, which is the support price. This strategy combines RSI, Bollinger Bands, and forecast data to maximize profit while minimizing risk. The layered approach allows for adjusting the position based on the price action, ensuring the best possible outcome. Based on the historical data and forecast, Bitcoin Cash has shown volatility with periods of both upward and downward movement. The support price consistently remains around $473, while the resistance hovers around $517. The RSI fluctuates between 37.7 and 56.0, indicating oversold and overbought conditions at times. The Bollinger Bands suggest that the price has been moving within a range, occasionally touching the upper and lower bands. Considering these factors, I propose a strategy that combines RSI, Bollinger Bands, and support/resistance levels for optimal results. My recommended investment strategy involves a long position with an entry price of $493 on November 13, 2025, based on the forecast. Given the recent RSI readings below 50 and the price approaching the support level of $473, this entry point offers potential for upward movement. I will set a stop loss at $473 to protect against significant downside risk. The target price will be $507, aligning with the recent resistance levels and a reasonable profit margin. If the RSI reaches 80, I will consider taking profits or adjusting the target price. This strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Maple Finance shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates around the 50 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening recently, suggesting increased volatility. The forecast for the next week indicates a slight upward trend, with prices hovering around $0.44. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $0.373, which is currently acting as a strong base. Our stop loss will be set just below this level at $0.36 to mitigate potential losses if the price breaks down. The initial target price will be the recent resistance level of $0.471. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI falls below 30 near the support level, it signals an oversold condition, strengthening our buy signal. Conversely, if the price touches the Bollinger Band's lower limit around $0.36, it also supports a buy decision. If the price reaches the upper Bollinger Band of $0.483, we'll move our target price to $0.5. This layered approach, combining support/resistance with technical indicators, aims to maximize potential returns while managing risk effectively. Therefore, the final portfolio will be a long position with an entry price of $0.373, a stop loss of $0.36, and an initial target price of $0.471, with a potential adjustment to $0.5 based on Bollinger Band movement. Based on the historical data and forecast, Sonic shows a downtrend with increasing volatility. The RSI consistently remains below 30, indicating an oversold condition, while the Bollinger Bands are widening, suggesting increased price fluctuations. The support price is consistently at $0.14, and the forecast predicts a further decline to $0.108. Considering these factors, I recommend a contrarian strategy, anticipating a potential rebound after a period of consolidation. The entry price will be $0.123, coinciding with the initial forecast price. A stop loss will be set at $0.11, slightly below the forecast low of $0.108, to limit potential losses. The target price will be $0.14, aligning with the established support level, aiming to capitalize on a potential bounce. To implement this strategy, I suggest a portfolio with a 60% allocation to a long position at $0.123 with a stop loss at $0.11 and a target price of $0.14, and a 40% allocation to a short position at $0.169 with a stop loss at $0.175 and a target price of $0.14. This diversified approach balances the risk of a continued downtrend with the potential for a rebound. This strategy combines the RSI oversold signal, Bollinger Bands volatility, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, PAX Gold demonstrates a clear upward trend. The price has consistently tested the support level of $4,000 and has been pushing towards the resistance level of $4,360. The RSI indicates a move from oversold to overbought territory, with recent values exceeding 50, suggesting strengthening momentum. Furthermore, the forecast predicts a continued upward trajectory, reaching $4,350 by November 19, 2025. Considering these factors, I recommend a long position strategy. The entry price should be $4,170, coinciding with the start of the forecast period. A stop loss should be placed at $4,000, aligning with the established support level to limit potential losses. The initial target price is $4,360, the resistance level. If the price breaks through this resistance, the target price can be adjusted to $4,350 based on the forecast. This strategy combines trend analysis, RSI signals, and Bollinger Bands predictions for optimal risk-reward ratio and high returns. Based on the historical data and forecast, Render shows a volatile trend with periods of both upward and downward movement. The RSI consistently dips below 30, indicating oversold conditions, while the Bollinger Bands suggest potential price reversals. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. The entry price will be $2.1. To mitigate risk, we'll set a stop loss at $1.9, just below the lower Bollinger Band. Our target price will be $2.7, aligning with the upper Bollinger Band, offering a substantial profit potential. To refine this strategy, we'll incorporate support and resistance levels. If the price approaches the $2.32 support level while the RSI remains oversold, it signals a strong buying opportunity. The entry price will be $2.12. The stop loss will be placed at $2, protecting against potential downside. The target price will be $2.7, capitalizing on the anticipated upward momentum. This combined approach, blending RSI, Bollinger Bands, and support/resistance analysis, aims to maximize returns while managing risk effectively, positioning us for success in the dynamic render market. Based on the historical data and forecast, Raydium demonstrates a downtrend with periods of volatility. The RSI consistently dips below 30, indicating oversold conditions, while the price oscillates within the Bollinger Bands. Considering the forecast for November 13, 2025, at $1.32, I recommend a long position. The entry price should be $1.33, with a stop loss set at $1.31 to mitigate potential losses. The initial target price should be $1.43, aligning with the support level. If the price reaches $1.43, consider a trailing stop loss to protect profits and potentially target $1.63, the resistance level. To optimize returns, I propose a portfolio combining the RSI, Bollinger Bands, and support/resistance strategies. The primary strategy will be based on RSI, entering long positions when the RSI falls below 20 and exiting when it reaches 80. The Bollinger Bands will be used to confirm the trend, with prices near the lower band indicating potential buying opportunities. The support and resistance levels will serve as secondary targets, adjusting the stop loss and target prices accordingly. This blended approach aims to capitalize on both short-term momentum and long-term trends, maximizing potential gains while managing risk effectively. Based on the historical data and forecast, Internet Computer shows a strong uptrend from October 30, 2025, to November 12, 2025. The RSI consistently moved above 50, reaching overbought levels above 80, indicating strong buying pressure. The Bollinger Bands also widened, confirming the increasing volatility and trend strength. Considering the forecast for November 13, 2025, to November 19, 2025, which predicts a price range between $5.35 and $6.23, I recommend a strategy that combines RSI and Bollinger Bands. We will enter a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. Specifically, on November 13, 2025, the forecast price is $6.1, and the RSI is expected to be 34.5. While the RSI is not below 30, we should wait for a dip to trigger our strategy. If the price dips to $5.97, which is the support price, and the RSI falls below 30, enter a long position at $5.97. Set a stop-loss order at $5.7 to protect against a potential downside reversal. The initial target price is $6.5, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches $6.5, consider moving the stop-loss to break even to secure profits and potentially ride the trend further towards a secondary target price of $7. This portfolio combines the momentum of the RSI with the volatility signals of the Bollinger Bands for a high-return strategy. Based on the historical data and forecast, DECRED demonstrates a strong upward trend with significant volatility. The RSI consistently fluctuates above 50, indicating bullish momentum, and recently reached overbought levels, above 80, suggesting a potential pullback before further gains. The Bollinger Bands show widening bands, confirming the volatility. Considering the support price of $25.6 and the recent overbought RSI, a strategic approach involves anticipating a temporary dip followed by a continuation of the uptrend. Therefore, I recommend a long position entry at $32.3, coinciding with the first forecast price and a slight pullback from the previous day's close. A stop-loss should be placed at $30.8, just below the recent low, to mitigate potential losses if the price declines further. The target price for this trade is set at $38.8, aligning with the upper end of the forecast range and a reasonable expectation of continued upward momentum. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI suggests a potential for price correction, and the Bollinger Bands confirm volatility. By entering at $32.3, setting a stop-loss at $30.8, and targeting $38.8, this strategy aims to capitalize on the prevailing upward trend in DECRED while limiting downside exposure. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, SKY has shown a volatile trend with periods of both decline and recovery. The RSI consistently indicates oversold conditions, frequently dipping below 30, suggesting potential buying opportunities. The Bollinger Bands have been narrowing recently, indicating a period of consolidation, but the forecast suggests a potential breakout. Considering the support price of $0.0576 and the resistance of $0.069, I recommend a long position strategy. We will enter a long position when the RSI falls below 20, setting the entry price at $0.054. The stop-loss will be placed just below the support level at $0.053 to mitigate potential losses. The initial target price will be the resistance level of $0.069, aiming for a substantial profit. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, around $0.0548, while the RSI is oversold, it strengthens the buy signal. We will adjust the target price to $0.0569 if the forecast price reaches $0.0548. This combined approach leverages both momentum and volatility indicators. The overall portfolio will allocate 60% to the RSI-based strategy and 40% to the Bollinger Bands-enhanced strategy. This balanced approach aims to maximize returns while managing risk effectively, capitalizing on the current market conditions and projected price movements. Based on the historical data and forecast, Zcash shows a strong upward trend, breaking through the resistance price of $532 and consistently reaching high RSI values above 70, indicating overbought conditions. The forecast for the next week suggests a slight pullback before resuming the upward trajectory. Considering the current RSI of $60.2 and the Bollinger Bands, which are widening, indicating increased volatility, I recommend a long position. The entry price should be $508, coinciding with a slight dip in the forecast and a potential bounce from the lower Bollinger Band. A stop-loss should be placed at $494, just below the forecast low, to limit potential losses. The initial target price is $554, aligning with the forecast high and a conservative projection based on the recent upward momentum. However, given the strong trend and potential for further gains, a secondary target price of $534 is set, based on the forecast. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk. The portfolio will prioritize the long position with a $508 entry, $494 stop loss, and $554 target price, adjusting as needed based on real-time market conditions.